Thank you for joining us today on this beautiful December 7th. Do not forget about Pearl Harbor and remember to pay attention so we don't fall asleep and have the same thing happen to us again.
Well, I hope that doesn't happen.
Well,
But you got to remember, I mean, the Japanese attacked Pearl Harbor because we imposed all these sanctions on them because of what they were doing in China and the Philippines. So they attacked us because they figured if they wanted to get our oil, they figured they had 6 months. So things were a little bit different back then. But whatever, people still shouldn't forget. And it's like you think about these. I went to Pearl Harbor, and it's really pretty friggin' moving, man. Um, and you think about these. I mean, these were like friggin', they were kids. Like there's same age as my kids are now, 18. You
yep,
know what I mean?
yep.
It's like, and a lot of the veterans back then, or there's just kids, man. But anyway, yes. So the day that will live in infamy. So please don't forget. All right. So what's going on this morning?
Just another beautiful day. Nice in South Florida. It's about 55 outside. The wind's blowing. Had a nice rocket launch last night.
Oh wow, that must be cool.
It is.
It was loud.
Yeah, you get a reverb about 6 minutes after the rocket goes up. You'll feel the concussion come back. It's wild.
Wow. All right. Let's see what's going on here. Wall Street puts a sell on its China holdings, and oh, okay. So I think we got some trading ideas to look at here. But so we're going to look at natural gas. So remind me if I don't forget.
Hey, real quick, I'd like to point something out. Do you see this headline right here where it says GOP senators block Ukraine aid bill?
Yeah.
There's 49 GOP senators and 51 Democrats. How did the GOP block it?
Well, do they need a 2/3 vote?
No, not in the Senate. It's a 51-50, 51-49.
Uh, let's see. Chuck Schumer.
Oh, they've got to have a 60 vote threshold to advance.
Yeah. Yeah. Well.
Looks like the war in Ukraine's over.
Yeah. That's friggin'
Never should have been going on this long.
a travesty, man. It's such a and then this idiot comes out and is like, "Oh, I never talked to my son about business." It's like, I guess after lying for 50 years, you just think you can get away with it, you know? And you have, I guess, until now, because it's all coming apart. But anyway, I just want to look over here at China because a lot of negative news seems to be coming out of there. And this is a Chinese large cap ETF, FXI is the symbol. So, I mean, this thing completely fell apart last October as well. So I guess just something to keep on the radar screen. I don't think I would get in there now. But, this is down around $21 is where it found a bottom last time. So they could get there pretty quick. And then, all right, so let's see what that article says here. Wall Street puts a sell on its China holdings. One of Washington's biggest China critics traveled to New York in mid-December. Blah, 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 blah. They're already ratcheting back their investments there. It's not about the human rights record. It's about an economic one. Yeah, I mean, I guess that kind of makes sense because when it comes to money, people don't really care about human rights, unfortunately. I know, but they care about money.
Yep.
All right, so the amount of money that institutional investors have in Chinese stocks and bonds has declined by more than $31 billion this year, the biggest net outflow since China joined the World Trade Organization in 2001. So here's our net outflows. And let's just go look at the chart again here. So I guess this is this year and this is last year. Wow, so that's a big turnaround, man, from 36 billion inflows to 31 billion outflows.
Wow.
And that kind of I guess it kind of coincides with the decline in the market here, right? Because this is where there was the big outflow, and then this is where the money started to, or this is where there was the big inflow, and this is where the money started to outflow. So it kind of makes sense.
Hmm.
All right, let's see. Moody's is facing a barrage of criticism from China after U.S. rating company changes credit outlook. The U.S. credit rater had warned of dangerous rising local government debt. All right. I mean, it's at some point the chicken's got to come home to roost. And my kind of thought process is people don't really think about how big the deficit is because when you think about $31 trillion, that's like just, I think it's like beyond human comprehension. You can say, oh, $31 trillion or $33 trillion, whatever it is. But, it's like you can't really imagine that. So people kind of just shun it off. But at some point, something's going to have to happen. I mean, there's going to have to be, the government's going to have to default. Um, they're going to have to make drastic changes in how old you are when you retire. I mean, something's going to give sooner or later.
It's got to. They can't keep doing this. The taxpayers don't have the money, or actually, the economy doesn't have the tax base in it.
No, yeah, no one's got the money. $33 trillion. I mean, it's like that's gonna take a pretty long time to pay that back. All right. Anyway, I just want to point out natural gas over here because we could be looking at a potential trading idea here, and I actually just put this out on my blog as a trading idea. So I am going to uh, put my blog in the chat over here so you can send it out to all your friends. All right, paste. Anyway, pretty simple idea. I mean, just this thing has been crushed and it's gotten to a former support level, and it's actually up 3 cents since I put my blog out, which, you know, whatever.
You
But
move markets, Mark.
what's that?
You move markets.
Yeah, right. I wish. I wish. Very few people could do that. When I first got onto Wall Street, there was this guy named Dan Dorfman, and he was like on CNBC, and he was like this big, he was like the Kramer of the day, although he wasn't as obnoxious.
Yeah.
But anyway, he got caught because he got so popular he could move markets, and he would front run his trades. But anyway, we've been in this huge free fall, so we're really oversold, and you can see that because this blue line has gotten below this lower threshold. So let me just fix the colors here, or the view. All right. So oversold means that something is trading below what would be its typical or normal range. And when that happens, it gets the attention of certain types of traders because they're going to be expecting a reversion to the mean. So that's going to draw buyers into the market. So that's one dynamic. Another dynamic is that we're at a level, around a price level, 250, where there's a lot of buy interest. The third thing is that when things get to support, sometimes they rally off of them. See how here we get to support and we rally, we get to support and we rally, get to support and we rally, get to support and we rally. And that's because some of the traders who want to buy at the support level start to notice, hey, the price isn't going down anymore. So that must mean there's new buyers coming into the market. So they raise the price that we're willing to pay so they can cut ahead in the line. Now, if you're willing to pay 250 and someone else is willing to pay 251, well, the seller is going to go to whoever is willing to pay 251. So you get this kind of snowball effect, and we bounce off of the level. So there's a good chance that that happens again here. Now, you can look at your UNG ETF, because I assume you're probably not a futures trader. Although futures trading sounds a lot more scary than it actually is. I mean, if you could trade stocks, you could trade futures. So this is designed to track the price of natural gas. But here's a little bit of a caveat: is that the natural gas is currently trading because it's a futures market, and futures are basically open 24/7. This won't start trading until 9:30. So if this is something that you're think would be a good idea, you may have to go trade it in the pre-market. Because if this thing rallies by, by 9:30, then when UNG opens, the price already have moved up. So that's just something to keep in mind. If you're really bullish, you could look at the oil ETF, and this is an ETF which is designed to move in the same way as natural gas, but by twice as much. So if I was to look at natural gas, what would be my... Let's talk about what could be a potential trigger to get into it. So we got our setup, right? We're oversold. We're at a clear support level. Now, what could be a potential trigger to get into the trade? And why did this not save? A potential trigger could be, and I think these seem to be pretty relatively accurate. Well, pretty accurate on a lot of different things. But we have our oversold conditions illustrated on the bottom here. A potential trigger could be when this blue line crosses back above the red line. That could be your trigger. So just because it's oversold doesn't mean it's going to reverse. All right? But if it's oversold, one of the things it needs to do before it reverses, it needs to become not oversold. It's like, if you're driving a truck, you can't just stop and instantaneously back up. You got to slow down, come to a stop, and then back up. So like if you look up here, when we got overbought, if you waited for this reversion to start, you literally would have sold on this day. So it's the same kind of concept. Here, we never really got out of it. We touched the red line, and then we rolled back, and that was on this day. So I think that's a pretty good chance we see some upside here. Let's look at the recent levels. Let's look at 2 days. So this is Wednesday. Today's Thursday, right? So this is yesterday. So I had this big move down mid-morning. I mean, that's a really big move for this. So I don't know what happened there. All right, so for shorter term, I mean, we're really talking about literally pennies, right? Like literally. But we can see that we've had some resistance around here, around 252. I mean, I would probably give myself a little bit of room, and maybe, I don't know, maybe if it gets to 254 or so, that's where I would consider jumping in. We are dealing with pennies, but it looks like there could be some pretty decent upside here if it rallies. I mean, because we had our fast move down, and we know one of the main reasons why we get resistance is because we have remorseful sellers or buyers trying to sell on the way up. But when you just fall right through these prices like this, you just don't have a lot of time for there to be a large concentration of remorseful sellers to form. All right, so that's the natural gas situation. The oil situation, I don't think it's a trade yet. I don't think it's a trade yet, but keep an eye on it here. Same kind of deal. We're getting close to a well-defined support level, or what has been a well-defined support level, I should say. And we're going to say that is, I don't know, 67.30. And we are at about 70. And this is another like really rapid sell-off. I mean, I wonder what is driving this here. If it is a slowdown in China.
It's got to be demand.
I mean, this is some really aggressive selling. I mean, look at this. This is in a free fall over the last 4 or 5 days. And natural gas, you could say the same thing. I mean, this isn't just your routine profit taking. This is like in a free fall. So now it could be reversing back to 253 almost. All right, now let's go look at the stock market. Start off with the S&P 500 like usual. So this was some pretty weak action yesterday. We got up to this resistance level, and then just sold right off of it. I mean, that's a pretty nasty sell off yesterday. I mean, it's only down. It only says down 40 basis points, right? That's because they're measuring where it closed from the prior day's close. If you measure the sell off from where the price opened, which I think in a lot of ways is more important, it was down about 90 basis points, which for the S&P is a big move.
Yeah.
So we're back to this support, rebounding a little bit, because as we know, we tend to rebound a little bit off support when we get to it. But we're still, well, we're not right in the middle of the range. We're closer to the lower side of the range. This is where we're trading this morning. I'll just put this in like right 450. Yeah, so that's where we are this morning. Right? So, this is not positive action in here. And as we had discussed, a lot of this has to do with the action in Apple and Microsoft, because I kind of see it as though it could be like a kind of a flight to safety. Because a lot of the market does not look well. But because all this money is flowing into these stocks that dominate the S&P, just the two of them together, Microsoft and Apple, are about 14 or 15%, it masks the fact that there's negative action in a lot of the other places in the market. So it could be considered a flight to safety. In the old days, it's like, all right, the flight to safety was you go out and you buy gold. But things have evolved a lot, and maybe there are different kinds of flight to safeties, and what could be considered safer than Apple and Microsoft in the minds of current investors.
Right.
So let's see what Apple did. Yeah, so Apple staged, made this big move the other day. It's given some of it back. Now, this is kind of interesting because Apple's sitting here on this short-term, what was resistance. So this could come back in pretty quickly. So just keep an eye on that, because this will probably trigger the broader market to come in. And again, we had our rapid move higher. When you get fast moves through price levels and you reverse and you come back through them, you tend to get fast moves going back the other way. So keep an eye on that. And we had a sell-off yesterday, really doing nothing in the pre-market. Let's just take a closer look at this guy here. Let's see. I would say, yeah, I mean, there's about a point until we get back down to here, but we had this fast move higher, and as we know, gaps or whatever, fast moves can get refilled pretty quickly. So this could bring tech down, and that could bring the broader market down. And I think we could probably be looking at a pretty decent size sell-off based on our extreme sentiment. You know what? I hate to look at CNN because I just despise them as a freaking organization, because they're just laughable. But
Well, they're just a mouthpiece for their government. Actually, for the Democrat Party.
They're not even a mouthpiece. They're a propaganda machine.
Yeah.
I remember one time when I got home. Remember when the Notre Dame Cathedral was burning? Right?
Yeah.
It's like the entire world is watching the Notre Dame Cathedral burn. It's on every channel. It's the main story. And then I'm channel surfing and I get to CNN, and they got Anderson Cooper sitting in the middle, and they got 4 people on each side. So there's 9 people on the screen, just bashing Trump. And down in the corner, the little corner, like my face is now, there's like Notre Dame burns. It's like, and what's so pathetic about them is they never have point counterpoint. They just get people that have the same opinion. And just agree with each other.
It's just a sounding board.
Yeah, and there's no like, I mean, obviously Fox is tilted to the right, but they have Democrats they have Democrats on. You don't see too many Republicans on CNN. But anyway, all right. So Microsoft, probably the key level to watch around here is like around 363. So if Apple starts to tank and this breaks this support, we can get some pretty decent sized sell-off. Actually, let's look at XLK. Yeah, I mean, weak action here. The level is down here. So this could all kind of come tumbling down pretty quickly. And the reason why I say that, and what I refer to when I refer to as sentiment, is one of the things we watch here is this sentiment survey. Well, look at this. So there's kind of been a big shift actually.
Yeah.
Well, not a huge shift, but we got really all right. So this could change my thinking a little bit. But 47 is still high, and 27 is still a little bit low. So people are still on the bullish side of things. The historical average of bullish is 37%, and we're at 47%. So we're coming off extremes, but it might take a week or two to play out. But when we have a whole lot of bullish investors out there, if most investors are bullish, what do? Well, they go out and they invest and they spend their money, and when the money runs out, there's no one left to push the market higher. And I think a really good example of that can be illustrated in the recent action in Nvidia. The company reports these, blowout amazing numbers, and the stock actually went down. So what does that mean? It means that like everyone who wanted to buy Nvidia had bought it. The stores closed, so to speak, right? No, there's no one left out there to buy. So the only place it can go is sell. So this is a little bit of a turn. And if interest rates continue to go lower and some of this overboughtness comes out of the market, then maybe we look for another move higher. But I don't think we're there yet. I mean, price action ultimately is the most important thing. And we saw a weak price action in Apple. Here's our tech sector. The healthcare sector is our second biggest sector. Let's go see what's going on over there. All right, so healthcare, I would say it's neutral. Got this little bit of a breakout. So that's neutral. All right. Here's our financial sector. So the action here is a little weak as well. See, we're kind of turning. Yesterday was the lowest close in the last 4 days. We got probably some pretty clear support around 35.50. But so this looks weak. So tech looks kind of weak. Healthcare looks neutral. Financials look kind of weak. Here's consumer discretionary. I would say this looks, this is a little bit overbought, and this is approaching resistance. So it's at 171.5, and last time it got to 175, there was, you can see there's really clear resistance there and here. I mean, don't let this fool you. That's only like a 2-point difference there. But look at that right there. I mean, exactly 175. So that could put a little bit of top on this sector. The overbought conditions will probably draw some sellers into the market, and then resistance is a level where there's a lot of sell interest. So those two dynamics or characteristics could put a little bit of a top on it. All right, let's look at our communication services. Now, once again, we see this example that we see pretty much all the time, right? What was a resistance level can turn into a support level. And sure enough, we get this big sell-off, and where do we find support? Like to within pennies. 68.80. Well, it's where we were at top back here. 68.80, right? So you get people who sold, and when the price goes higher, they're like, God damn, want to buy my shares back if they get back to the level I sold it. So because of this seller's remorse, you get situations where what was resistance turned into support. And if you don't think about this on a psychological basis, you'll never figure out how this happens, and you might as well give up. That's why most technical analysts don't know what the hell they're doing, and most newer traders fail, because they just look at the wrong things. They don't really get what it is they're supposed to do. A lot of people just regurgitate something else that they heard.
There's so much information out there, though, Mark. If you don't simplify it like you do, it gets overwhelming.
Yeah. And there's just so much misinformation out there that if you're someone who wants to learn, And, I'm not saying that these are like bad people, right? But when you put on at least your major financial news networks or your whole slew of your, millennial trading heroes that are out there on YouTube, um, I think that a lot of people they just regurgitate. Like, remember when it was not this past August, but the August before, when there was that big gamma squeeze was going to go on in Bed Bath and Beyond, allegedly.
Yes.
Like, how many people even know what a gamma squeeze is? But it's like everyone was talking about the gamma squeeze, but people don't even know what it is.
Well, with the gamma rays, they made the Hulk, so they have to make the stock great.
I mean, that whole thing was such a farce. I mean, I'm sure some of you are Reddit traders. You might remember. Well, hopefully, you're not a Reddit trader anymore. But here's a little bit of advice, right? If everyone and their mother is saying something's going to happen, then it's not, because that becomes the crowded trade. And I guess we could spend a little bit of time on this because it is very illustrative. Oh, and we got to look at GameStop too. So let me forget that, because they, I think, reported, and that stock tends to overreact always.
Constantly.
So whether it's good or bad, it's probably going to reverse. But anyway, back here there was this whole thing where there was this alleged gamut squeeze. This guy who was a activist investor bought these calls that were way out of the money, like up around $80. So the thought going around was that, oh, these market makers are going to have to go buy the shares to hedge their calls that they were selling, and they're going to have to go buy the stock, and it's going to drive it up to $80 a share. So you sell a call, and you go out and you buy stock to hedge the call. Now, me being the former market maker, I said to myself, well, gee, why wouldn't I just buy another call to hedge the call, as opposed to putting all these money into the stock? And, sure enough, that day comes and the stock blows up, and I don't mean blows up, but rips up to the upside. And what happens? It hits resistance at a level that was resistance before. So forget all the noise, forget all the news. A lot of times these market principles trump all that. So this is, if everyone's saying something's going to happen, or not, you know what I mean, not everyone,
Right.
but if the vast majority of people are saying something's going to happen, well, then it tends to go the other way. Because if there's an overwhelming amount of buyers, then the market runs out of buyers. It's really just a supply and demand thing. When the demand gets filled up or satiated, it's like, no one's going to buy it. It's like, all right, well, whatever, dude. My position is full. If you're an institution and you want to have a 3% position in NVIDIA in your portfolio, so you got a $1 billion portfolio. Well, once you put your $30 million into NVIDIA, your position is full. So you're not going to buy anymore, regardless of what happens. All right, so GameStop looks like there was some short-term support here, and now it's trading down around here. So I don't know. This will probably reverse, but I don't know if it's really going to be big enough, unless you're pretty nimble. But probably going to be a little bit of support right here. 13 and a half, and we're at 1365. So, I don't know. Maybe if this gets down a little bit more, I would look at it. It's going to be hard to find a level that's important because this is where it closed yesterday. But we got this big gap down. 1484. Yeah, so I don't know. I'd probably wait for. I would keep this on my radar screen. And we went through a lot of quotes yesterday of like these famous traders throughout history or recent history. And, there's this reoccurring theme. And it's like, wait until you see something good. Stay on the sidelines until you do. Don't force it. If you overtrade because you're bored or you feel like you're always going to need to be in the market, that leads to mistakes. Let's see here.
Steve talking about Tesla, and Avi's asking you about Cisco and Walmart.
Tesla.
And then we got CCL as well from Die.
I don't know. This looks pretty. Where are we now? I mean, it looks kind of neutral to me. You know, I mean, I mean, to me, this looks kind of neutral. It's like right in the middle of a range here. This line isn't really that well defined anymore. But yeah, you can see over the past couple of days, each time it's gone up to around 244, 245, it's come back in. See here, like we got all the way up to there, and then we came all the way back.
Mm-hmm.
We got all the way up to there, and we came all the way back. We closed at a higher price, so I mean, I don't really see anything there on that time frame. Now, if we look at we can see some more precise levels in this time frame if we're if we're a short-term trader. So here you go. Those last 5 days up around 246.35. You're probably going to have some resistance, and then probably going to have some support down around 233.90. Right. So those are pretty clear. And then you can see this level is a clear level of importance here. This is 238. See, so what was a peak becomes a valley, right? Resistance turns into support. Support stays intact because of seller's remorse. Resistance turns into support because of seller's remorse. People sell, and then when the price goes above their selling price, a lot of people are like, I made a mistake. I want to buy my shares back if I get them at the same price I sold them at. So those remorseful sellers placing buy orders can turn the level from resistance into support. You can look right in there too. 2180, I guess. See? Support there, support there. If you go to the 1 day, yeah, so you can see that there. That's what we just looked at. So I'd probably go, I mean, if I was day trading this, I'd probably go off of this chart. Cisco. Yeah, now look at this thing, right? This thing completely cratered, right? It had this massive sell-off. And again, look at where it came to the bottom. Like the low trade here was 46.20. And this line is at 45.75. You know, so now if you were trading it on this day and you were watching it, it's like, all right, we're getting close to support. We didn't really quite get there exactly, but we're talking about, you know, a matter of cents. Well, 50 cents on a stock that's $47. So it's like nothing. So when it started to reverse, that would have been the time to jump in. But, you know, forget all the news, forget all whatever. We ended up finding support at a price level that had been important in the past. So that's not a coincidence that that's where it stopped. But this, to me, I mean, this looks to me a little on the weak side because tech looks weak. So this is probably going to kind of just follow along. Yeah, it's trading right at the bottom of this range. So, yeah, I mean, this thing's testing support, and given the state of tech, there's probably a good chance that it breaks it. And maybe you get a quick move lower here because you had a fast move higher. So you're probably not going to have a lot of vested interest here. So if tech continues to go lower, this could be one way to get exposure to it. CCL or
Yeah,
Walmart,
Carnival.
of course.
Oh yeah, Walmart.
Yeah, and I mean the same thing here. We get this massive sell-off, and look at where we find support. So we're sitting right on support here. Now you got to start thinking. All right, we got to do some kind of what we call like a market neutral strategy, potentially, if that's your style, where you would buy calls and puts. But given the tone of the market, I don't know. My I would just keep an eye on it for a potential move lower. Let's see what treasuries are doing. Yeah, because we talk about this 410 level, and I thought there was a good chance we could see a bounce off of there, but we didn't. But it's a good chance we see a move higher off of this 410 level. Yesterday's low was 411. Then we're up a little bit this morning. Carnival. Yeah, I mean this looks. There's our descending triangle. We just need to find two more triangles, and our presentation is done. But it's so hard to find them when you're looking for them.
Right. They just show up when you're not.
I want to find two long-term ascending triangles. All right. So anyway, really overbought here. I mean, like very overbought. So last time it was this overbought. It got up to about 16 and went down to about 14 and a half, which doesn't sound like a lot, but on a percentage basis, that is pretty meaningful. So, now here, the question is, are we going to reverse or are we going to move higher, right? The obvious question. I think if we reverse, it's going to happen pretty quickly. And if we come right back below this, say, 17 level, it'll be a sign that we're overbought when we reverse. But if we hold and what was support back here turns into resistance over here, and we get unoverbought or back to neutral, then that would set the stage up for a move higher. But any time a stock rips higher like this and is overbought, there's just a really good chance that there's gonna be some profit taking, and it's just that simple. I mean, there are people that trade, and if the stock or whatever, if the market moves enough, there are people that are going to say, hey, I'm going to take some profits. So things don't go straight up. They'll go up. Say it's a long-term thing that's going to go up. It's not going to go up in a straight line. It's going to go up, then there's going to be some profit taking. It's like a 3 steps forward, 1 step back kind of thing. Palantir might be an interesting play, although the options are probably pretty expensive. But
Hey, did you hear? Did you hear that interview with Alex Karp the other day, the CEO of Palantir?
no.
Oh my God, he called the world out about being anti-American and trying to take down the Israelis, and it was a very good article, very good interview. Did it at the Reagan Institute for Defense.
Yeah, it's pretty amazing, man. We're at it's like being in high school. It's like, geez, it's like we're on the verge of friggin' some kind of serious nuclear war here, I mean,
Seriously.
it's like, I mean, stuff happens by mistake a lot of times, right? Remember when the U.S. shot down that Iranian passenger jet? Was that the USS Stark, maybe?
Yeah.
Yeah, I mean, the Cuban Missile Crisis was like a rogue. I don't know if it was a Cuban or a Russian, like shot down the plane, and everyone wanted to go to war, but Kennedy. When I was in business school, like when I was growing up, we always heard that Kennedy, that was like a great win for the United States.
Yeah.
But when I was in business school, in my negotiating class, we learned that it was actually a win for the Russians because the United States agreed to take its missiles out of Turkey,
Right.
and that was our like first line of war, offense or defense against the Russians. So anyway, I don't know, just a little bit of a brief aside there. But here's Palantir, and we break support, coming back a teeny bit this morning, but again, if the market turns south, this thing could move pretty rapidly. And a couple other things I want to show you guys. You don't really see these too much, but this is the old, what we call the symmetrical triangle. And I was just, as I'm looking for ascending triangles, I just happened to come across this. So, I mean, these things don't really happen too much. which is why I don't really talk about them. But you get this kind of thing here where the buyers are getting more aggressive at the same time as the sellers are getting more aggressive. So sooner or later, one side overpowers the other and it breaks out. So unlike an ascending triangle, which we see as bullish, and a descending as we see as bearish, this is something that I guess you got to kind of wait for the very end to figure out which way it's going to go. So that's your kind of classic symmetrical triangle. And I also saw one in this stock here, or was it a fund? I thought I saw one in here. Yeah. Let's see here. I mean, it's not as well defined, but you can see it. You can see it up here. So it's just like this big, it's kind of tug of war that's going back and forth. And finally, at the end, the red team wins. So I don't know. I guess if you see something that looks like a symmetrical triangle, it's worth paying attention to. But it's not something that you see. It's not something that you see too often. At least I don't see them too often. Whereas everyone sees things differently. But you see, it's like, it's like you gotta, like you don't just knock the refrigerator over on the first push. You gotta rock it back and forth,
Right.
And then finally, it's like breaking up with the girl, right? It's like just doesn't happen on the first time. You always got to get back together a few times. And all right, PLCE. Children's Place. Yeah, lo and behold, there it looks like a little bit of a symmetrical triangle. All right, what do we got here? I mean, to me, this looks pretty neutral. The momentum's neutral, at least from this price range. I guess if we were going to go in there and kind of get a little more into it. There's one thing to look at. But here's another thing. I guess it's not trading in the pre-market. Here's your ascending triangle type pattern. So, it's not perfect, but few things are. But we got a low here. I guess you could argue that that's a low. But that's a low, and then this one. So you got these lows are forming at higher levels. That tends to be a bullish factor. So I would be watching this for a potential breakout. It's at 22.50, support around 23.65. So I think there could be a potential breakout there. So obviously it's a little too soon, but this is kind of bullish action when you get the lows forming at higher levels. I mean, this is not a perfect one by any means, but it's not about figuring out what the pattern is. It's about figuring out what it tells you. Like, let me just show you here. So this is like the thing I'm working on. So here is rider systems, right? So you got your support here. The buyers are hanging out, sellers are getting more aggressive, and then you get this big sell-off, and then look what happens here. Now you get your ascending triangle. So support turned into resistance because of buyer's remorse, right? People bought and they want to get out over here, break even. We have the lower highs, which shows sellers are getting more aggressive, but the buyers are hanging out. And then here we have the higher lows. Buyers are getting more aggressive, and the sellers are hanging out. So the descending triangle shows aggressive sellers and complacent buyers, and the ascending triangle shows aggressive buyers and complacent sellers. And it's a fractal type thing, right? We can look at a chart that's a 1 day pattern. Like look at this descending triangle. So this is Datadog, and I don't know what the date is, but here's our descending triangle that lasted from 1015 to about 115. So this is showing the anxious sellers of short-term traders. This is the psychology of the day trader. We're looking at a 1 day chart, and this is a fractal thing. If we look at this, now this is the same type of a situation. The sellers are getting more aggressive, the buyers are complacent, and this is a chart that's like 4 months. So this is what I mean by the fractal nature of charting. You see these same patterns on things of different time frames, because what you're looking at is ultimately the psychology of the people that are trading them. Now here's our ascending triangle, right? Here's the over 6 months. Sellers are patient, buyers become aggressive. Here's over a couple hours. Sellers are patient, buyers get aggressive. So these tend to be bullish dynamics, and you could tell that after the pattern, I guess, was completed, we had to move higher. We had to move higher. Here is diamond offshore drilling. This went from February to June or July. I think it's a very important concept. Now here we see the same thing, same pattern, but this is just over a couple hours. When I talk about the fractal nature of trading, this is what I mean. And you just got to look at it as though, all right, you're not looking at a chart of the stock. You're looking at a chart of the people that are trading the stock. So that's a big difference. All right, anyway, let's see if anyone has any questions. I mean, it's, watch interest rates, watch Apple.
Guys, just personally, I would like to thank you for the time that you've given us while we're building out this school and building out the website, and the time that you come and hang out with us. Mark's building something really special here, guys, and I can't wait for you to really kind of get into it and see all of it once we get it completed.
All right, I guess we'll see you all tomorrow.
Have a wonderful day, guys.